What's up, everyone? I hope you're doing well. As you all know, the PPI came in at 10.8 versus the 10.9 expected. So, there's obviously, recession fears circling. The GDP concerns as there was a dip. Fears of a recession mounting. As I've been saying for a while. If you watch my videos, I think 75 basis points is inevitable. That's something I've stuck with. So the question is, how much is that priced in? You probably hear a lot of different information out there. What my concern is a potential waterfall on Thursday. So with that being said, if you're looking to buy, you may just want to use some caution, and this is not financial advice, but originally I was talking with, some people I coach, and, I've been expecting Bitcoin to hit really low prices. So this is no surprise. I had also warned about the liquidity crisis. So I think this, everything going on should be expected, right? Look at gas prices, and inflation is a real concern. The feds are going to have to be very hawkish to get this under control. So, I was talking about SPY at around $372 with a potential bounce. You may or may not want to exit your inverse ETFs. I can only tell you that I have exited, so if you do want to exit those, the thing is about bear markets, you don't want to become a perma bear. Bear market rallies are powerful, and though I believe we are on a downward channel, I want to wait and see what happens Wednesday. I want to see if the S&P drops to like 3,600. I want to see if SPY has that potential to waterfall down even further than I was looking at buying in, perhaps to 350. I'm not saying that's going to happen, but that's how I'm playing it right now. So I'm going to mention a few different things I have been talking about for a while. With those I coach. For example, Solana. I had mentioned to several people, you don't want to go into Solana until $23. Now, at this point, a lot of people are going to be scared to buy. So, this is, about a transfer of wealth, getting positioned to absorb the wealth transfer, right? So you can't get overly afraid. I always say panic selling is the very worst thing you can do. At the end of the day, you're losing money unless you know you can buy in much, much lower. I want to say you all see Redbox is doing well. Originally we got in at $2.30, but we sold too early. At the time, chicken soup for the soul, that purchase, and the price they purchased it at, it was concerning, and obviously, these stonks are far removed from reality. It's a dead company, and, they're still taking it up. How high could it go? Well, I was saying I think it'll have some serious resistance around $15. It's dipping. Could it go much higher? Yes, it could, but if you do get in Redbox, all I can say is be very careful. The bottom line is a lot of people will have unrealized gains and end up bag holders. So, if you get too greedy, that's never a good thing. Obviously, you have to have patience in these plays, and that's what I want to say about that. Now, as far as GameStop, I think if GameStop continues on its trajectory and the price can get down to around between $90 and $100, I think GameStop could very well be on the brink of a short squeeze. Um, just look at the numbers. AMC. Um, I've said for a while, I think there's a serious risk of the price going to $6. And as I said, could we take off sooner? Yes. I mean, no one knows for sure. We have the executive order. Um, AMC, there hasn't been the orders coming in. The bottom line is, I think the price is going to get much worse before it gets much better. But that's just a part of the play. I have told new people that I talk to, if you want to buy in, I think you should wait till that $6 to $9 range. Just simply because I think it's a high risk of the stock going there. Does that mean I have not bought? No, it doesn't. But everyone's risk tolerance is different, and it's important that anyone I talk to doesn't invest and start losing money right away. Now, a speculative position around $10, $10.50, it wouldn't be a horrible idea, but like I tell people, you have to plan to dollar cost average on certain plays that are highly volatile. AMC could get down to $6 before it blasts off, plain and simple. It's a highly manipulated play. We know how they were rerouting orders through the dark pool. The corruption is severe. Nothing's been done about it. Nothing definitive or conclusive that's going to prevent the price from being beat down. So anyhow, I do want to say that about AMC. I think there's going to be a lot of great potential buys in the market, depending on if we waterfall Wednesday. I think there will be several plays to get in that will rocket up. This isn't a situation where we're just going to tank and it's over. I've had people, tell me they're scared to buy, and at the end of the day, scared money don't make money. You have to pick a place you feel everything is going to, whether that's timing, the price you feel it's going to, start dollar cost averaging, whatever the case is. We have seen significant drops. Obviously, in this market, put options do very well if you put in the right put options, but you don't want to short a hole. So I urge caution in shorting. We are getting to the point where I will be, probably Wednesday, Thursday. That's when I'll start moving into several different call options. So that's where I'm at. I think everyone knows our economy is in a pretty crappy position right now. I have mentioned just being forward looking, the housing market, that's why I share the numbers, because I think that's something for everyone to keep in mind. I think we're on a downward channel, and what you have to do essentially is look at that channel and know where you're buying and selling, and don't get overly greedy. Be patient with the plays. I still think we're heading towards a severe market crash. As I warned about stagflation quite a bit ago, because that was a big concern for me. So when I see people freaking out and coming out about, oh my God, like crypto, and I don't understand how all this seems to be a surprise. I think it was evident that Bitcoin was headed to that 26, 23, and the 20,000 range is the psychological level of support. If we break 20, we're going to 10. I personally believe we're going to 10. That's what I put on Twitter a while back. But does that mean we won't bounce at 20? No. Around the 20 range? No. But ultimately, I have serious concerns for it. And if you haven't looked into the new crypto bill, I suggest you look into the new, information, and understand that. But I'm not going to get too much into all of that. I just want to say that, sometimes capital preservation is key. Sometimes waiting to pounce. I think most people lose because they just jump in and they buy and they're not looking ahead. when the Feds hit 75 basis points. Again, the good thing about it, and I think they'll have to do 75 basis points on the next raise in July. But my point is this: when interest rates start going up, cost to borrow goes up. I think the AMC play could be drug out all the way until August and perhaps a bit later into September. No one knows for sure. The point is, the pressure is going to keep mounting on them to cover, and at some point they're going to have to cover. And the implications of the data, we're going to have some large numbers. It's been a long fight. The fight isn't over. So I just want to say to anyone holding for AMC, it's the same thing I've always said. Don't invest more than you can afford to do without. You don't want to have to end up, selling to pay bills. You don't want overexposure. I think it's important to have cash on hand, to average down at least 6 months worth of your living supplies. I think you have to consider layoffs. Our economy is just not doing well, and it's as I've said before, and I warned about. It takes time for this balance to occur. And in regard to interest rates and inflation, one has to get a lot worse before the other gets better. So that's how the Feds are going to crash the market. I'm looking at some pretty low numbers, as I said. I think S&P. I think it's very possible it could waterfall to 3,600. And again, this is not financial advice, but SPY, it might waterfall to 350. Now, your risk exposure is your risk exposure. If you want to go ahead and start dollar cost averaging at around 365, 370, that's up to you. Everyone plays this differently, but I think diversification is key in this market. Obviously, the more plays you have, the higher chance of success. If you plant 30 apple trees, some of them are going to produce apples at different times, and that's what it comes down to. So I think that is also something to remember, is diversification. I think it's very important that you just are not in a situation where you get impatient, you start buying too early, you're not looking at key dates up ahead that could create lower prices. Understand that regardless of our economy, that's why I share the options expiration chart. And I think the VIX, as I said, it's going to decompress. I think we're going to hit some lows Wednesday, and I think we'll rock it up, depending on where we hit the lows, Wednesday or Thursday. And I don't think it's going to be a V-shaped recovery, but I think we're going to have some really nice recoveries and rocketing up in the market. Bear markets are powerful. So in regard to puts, that's what I'm talking about. Be careful shorting a hole, because you could get really burnt in a bear market rally. Just because it's a bear market doesn't mean there's not rallies. So I just want to point that out. I think it's also important to diversify assets and not just have everything invested into the stock market. Obviously, cryptos are very volatile right now, so that's evident at this point. But what I think a lot of people don't realize is, or at least in my opinion, it's going to get worse. So just something to keep in mind. Be very careful. If you're buying in long term, chances are you have the mindset that you know what you're doing. You have an investor mindset. You're not going to invest more than you can afford to lose. You don't want to be out here, eating bologna sandwiches because you've invested so much. And that's one thing I talk to people about. And sometimes people laugh, but it's really true. You have to have money to live on. It's good to have cash reserves. It's peace of mind. At the end of the day, you can dollar cost average. Is this a market you want to get overly greedy in? be careful if you do. That's all I can tell you. There's a lot of money to be made in bear markets. There's a lot of money to be lost in bear markets. It all depends on your patience, your timing, and that you're not getting too emotional and greedy. So, you know, there's a lot of different stocks I could cover, right? And some of you may want to buy indexes. If you want to limit your exposure to individual risk, you can always buy into indexes after, you know, perhaps Wednesday. See what the market does on Wednesday, you know. You know, if you become a victim to this FOMO mindset, it's not really a positive thing. But, you know, that's a way to limit your exposure to such individual risk. And if you're like me and you think after some possible huge drops on Wednesday, you know, you may want to consider buying in some indexes. Now, there's been some individual stocks that I recommended, like IMPP. I like the stock. I think it's going to move up. Where am I going to sell? I'm holding until $5. That's just me. You know, some people might want to start selling at 180. I recommended INDO. INDO has dropped a lot, but they are, you know, they've been in the process of getting new wells. You know, the risk to that 6 or 7 has been there. But, you know, the bottom line is, you know, scared money doesn't make money. Sometimes, you know, you have to dollar cost average. That's what, you know, that's one thing I've always said. You don't just jump in head first and buy, and go all in, or at least that's my strategy. Because, if, you know, if you're like me and you diversify, you're invested in a lot of different positions, you're not just dumping everything in, right away, right? So anyhow, there's going to be a golden opportunity here for the market rocketing up. That's the bottom line. So I think it's about timing and getting positioned. I think the VIX is going to top out and start decompressing, at least moving into Wednesday and Thursday. So, you know, do you want to hold on those for your psychological peace of mind? That's up to you. But what I'm saying is, you know, it takes a little more work and effort and research. But, you know, I've sold because now I'm ready to wait for some dips to ride up, and that's what I'm doing. Ultimately, I feel that we're in a downward channel. We're gonna have a severe crash. There is no soft landing. The Feds are going to have to get aggressive with interest rates. That's the bottom line. That's why I've said, while people have been saying, oh, 50, I've been saying 75, and who knows, on the next increase, I think they'll have to do 75 as well. You know, the fact is, gas prices are soaring. I think China has made up their mind. I think they will likely invade Taiwan in the fall. That's going to make gas prices go even higher. I look at the call options, many call options suggesting $200 a barrel by winter. I think that's a high likelihood. Inflation is a serious issue, and I think it's going to get worse. I hear people talk about, you know, inflation peaking out right now. You know, I respect everyone's opinion, but I'm under the opinion that interest rates are going to have to continue. The Feds are going to have to be very hawkish moving forward. And though we may have a temporary decline, I think, you know, very temporary, it's going to rocket. But again, at the end of the day, as interest rates go up, borrowing rates go up to short stocks, or they should, right? So this is a positive for the market. It's all in how you look at it. You know, I think it's good to have a hedge against any risk. You know, and that's why I say, you know, this is a market. Well, the bottom line is, you know, if you're jumping in and out of inverse ETFs and back into the market, you know, you're making money. You know, I recommended, you know, MPC early on. I recommended a lot of plays that have done very well. But at the end of the day, you know, it's up to you where to sell. That's why we say if you have questions, ask, put them in the comments. I'm not I don't consider myself an expert, but I do consider myself as someone who's done this a long time, who understands how the market works, understands how hedge funds think. You know, they have been very careful this entire year putting money into the market. That's just the reality, and it's still going on. If anything, they're being more careful now. So you know, that's what we've seen lately. They're taking money off the table. You know, prices are dropping. I think you'd be wise to wait again until Wednesday. I just want to throw that out there. I guess that's all I have for now. I think there's a lot of great plays. I think Gores Guggenheim will be moving up soon. I think they've had some great news. You know, will I be looking for dips in oil companies? Yes. I will be waiting for some big dips in oil companies at this point. There's a lot of individual stocks on my radar. So as far as that goes, I'll throw out a video later if anyone's interested in price targets and getting in on any of these plays. Like I said, be careful that you're not developing the perma-bear attitude. You know, this market is constantly about reassessing and reallocating your funds. That's how you keep it growing. That doesn't mean there's not a few days where occasionally I do nothing because, like I said, I'm waiting on Wednesday at this point to see what happens. I don't want to get burnt, but I do want to jump in there and make money. You know, regardless of, you know, like I said, the downward channel, you know, I want to make money, and regardless of how low this market continues, you know, it's always followed by a bull market. So that doesn't mean I'm saying that we're going into a bull market, but it means that, you know, if you're scared and you just stay on the sidelines and you say, you know, you know, they want to wait till much later on to invest, you're going to miss out on some rockets along the way. So again, limit your exposure, limit your risk. Diversification is key. I think you have to be methodical. You have to have companies that you feel like that will do well, and there are a lot of them. That's why I encourage everyone to do your research, and that's pretty much all I have for now. I hope I didn't ramble on too long. You know, I just want to be helpful in any way I can, but ultimately, I just want to reiterate, yes, I think we are headed toward a severe crash, but you know, my original thoughts are, you know, until Q4, around October, you know, well, that's when I think things are going to start. I guess you'd say a shitstorm, you know, moving into you know, late September to October. As I said, quarterly earnings will grow weaker. Inflationary concerns are one thing, but you know, you have the Fed battling that with interest rates, and I think most of you understand by now the damage it causes on the economy. Rising interest rates, people's mortgage rates. People are struggling out here. You know, they don't put everything in the news as it is. People are struggling out here to pay their mortgage, gas, buy food, and you know, it's just the way it is. You know, and as borrowing becomes more expensive, you know, rising interest rates does damage of its own. Our economy is hurting. It will continue hurting, but that doesn't mean there won't be periods to get in and ride the waves up and down. So that's all I have for now. I guess I'm going to close. Any individual other stocks I will address separately. But I hope you all have a great day, and I'll see you on the next one. Peace.